Good afternoon, ladies and gentlemen, and welcome to the Solid State PLC presentation to introduce the acquisition of Willow Technologies Limited. We will also give a brief summary later on in the presentation on group M&A strategy, having made two acquisitions in close succession. So we will bring those two together in a slightly more cohesive way. To start with, if we could cover a couple of housekeeping items. Before we begin, we would like to submit the following poll, which you'll see on your screens. Throughout this presentation, investors will be in listen-only mode. However, questions are encouraged and can be submitted at any time via the Q&A tab situated on the right-hand corner of your screen, or if anyone has dialed in via solidstate@walbrookpr.com. The company may not be in a position to answer every question it receives today. However, the company will review all questions submitted and publish responses where appropriate. These will be available on your Investor Meet Company dashboard. Finally, we would like to remind you that this presentation is being recorded. I would now like to hand you over to Chief Executive Gary Marsh, Group Finance Director Peter James, and John McMichael, Managing Director of the Value Added Supplies Division. Gentlemen.
Thank you for joining us today, everybody. I'm John McMichael, and I'm the Managing Director of the Value Added Supplies part of the business. So I'll be giving you some of the background and then a little later on some of the detail about this recent acquisition. So just to launch straight in brief, the company that we've just acquired, Willow Technologies, has been around since 1989. It has offices in Spain and Germany, and also a subsidiary in Elkhart, Indiana, in the United States. Willow has a long pedigree of providing electromechanical devices to the industry. Through its manufacturing subsidiary in the USA, it produces relays, contactors, float switches, glass to metal seals, and several other devices as well. These products are manufactured under the brand names of Duracool and Hermoseal, both of which are registered trade names owned by Willow. Importantly, the company has a culture similar to that of our Value Added Supplies division within Solid State PLC. And the initial meetings with the key suppliers have shown that we have a very similar philosophy in our market approaches. The senior management recognise the value of their staff, and in turn, the staff do feel valued. Critically, during this period of COVID restrictions, the vendors have an earn-out and are staying with the company and will continue to run it, albeit with increased investment and a strategy now focused on growth. And of course, we're looking to leverage the enlarged operations to benefit all areas of the existing businesses. We just wanted to take a bit more of a look at Willow Technologies and what they do for you. So just a little bit on that now. Like our other acquisition a few years ago, which was Pacer Components, Willow have both value-added distribution and component-level manufacturing. They are in fact well-respected experts in the field of electromechanical solutions, and they bring with them new skills to the group. Their product offering is world-class. It sits neatly in the high-performance area of their discipline and finds uses in harsh environments and difficult applications, in fact very similar to the products that we offer across the rest of the group. Consequently, the technology attracts higher gross margins than other products in the existing business. Their two brands are well established, and they're sold through direct sales and also through what we call channel sales, which is a series of reps and distributors worldwide. The USA sales channel is well established, and in fact, it may well be beneficial to the rest of the group. So, just taking a quick look now in a little more detail. The ability to produce our own brand goods within Value Added Supplies has been a strategic goal for some years. The acquisition of Pacer was the first step we took towards that goal. And Willow and AEC, by providing two key brands with existing market penetration that are ripe for investment in new product introductions. Underinvestment in the brands in recent years has created an opportunity really for us to get into new product introductions and to put new products in the marketplace in key application areas. With a mixture of in-house capabilities and long-standing subcontract relationships, AEC is able to take advantage of low-cost manufacturing for its volume products, alongside an in-house, more specialist, high-margin custom capability. The Hermosil product range is also ripe for investment and development, as green tech and electric vehicle applications require higher and higher levels of isolation to cope with the higher and higher energy levels that they're being required to deliver. These two established brands, and Duracool in particular, offer us the opportunity to bring products from our existing opto components business into that brand without the otherwise huge overhead of us trying to establish a brand from scratch. Gary?
Thank you, John. The UK operation has its headquarters in West Sussex, just south of the M25, with good air and rail connections 7 miles away at Gatwick. This operation comprises sales, technical support and warehousing. The US subsidiary houses production alongside sales, commercial and technical support for the US market, and this is complemented and supported by the European sales channel and other support resources. Willow and AEC forms part of the value-added supplies division, as John has already mentioned, broadening our product offering with the introduction of electromechanical components to the group. Both businesses expand the supplies division's capability to support our manufacturing division, giving access to leading products complementing both the power and antenna business units of Seertype. John will give you a bit more detail on this a little bit later in the presentation. Our operating structure with 2 divisional managing directors has given us the capacity to take advantage of these acquisition opportunities and acquire Active Silicon and Willow Technologies simultaneously. And this is what our supplies division looks like now post the acquisition. AEC and Pacer are both component manufacturing arms, whilst Willow and Solid State Supplies at the centre of the chart there are value-added sales operations. Willow is complementary to Solid State Supplies and AEC is complementary to Pacer. The 2 component manufacturing arms both make sensors and switches, with Pacer manufacturing optoelectronic devices and Willow electromechanical products. I'll now hand back to John.
Thank you. So we understand it's often quite hard to get a feel for just what these components are and what these components do. So what I'm going to try and attempt to do is just give you a flavour of what electromechanical components are. What you're seeing there is a list of typical electromechanical components, and on the right hand side just some little pictures that I'll try and give you a bit more colour to as we talk to this slide. So what are electromechanical products? Well, the first thing to note is that electromechanical or EMEC devices, as you'll hear them referred to here, are a product category within their own right. So our industry association, when it reports sales for this category separately to others. And hopefully you'll understand the importance of that as we go through the presentation. So in layman's terms, an EMEC device is one where the flow of electricity causes mechanical movement. Or if you think about it in reverse, where movement causes electricity to flow. And a good example is a light switch. That's an electromechanical device, one of the simplest there is. If you want it slightly more complex, a cooling fan is a good example of an electromechanical device where electricity causes a motor to turn, which causes the blades of the fan to turn. So what you're looking at on that slide in this picture, we've got on the right-hand side, a relay. Many of you will have seen that sort of thing within your cars. What a relay does is it uses a very small current to bring two contacts together, which themselves can carry a very high current. That's becoming more and more important in areas like green energy and electric vehicles. If you look in the center there, what you're seeing is a tilt switch. Tilt switches do exactly what they say. When they're tilted, they break the circuit, and when they're put back the other way, they make the circuit. Sounds very simple, but actually creating a tilt switch that can carry very high currents is not trivial. And on the left-hand side, what we have is a ceramic seal, and that falls under the Hermeseal brand of products. And in the electronics industry, hermetic seals, there are a means of closing off and protecting electronics from the outside environment. So that might be from gases, or it might be from moisture. However, once we've closed all that electronics off, we still need to get the signals in and out. So what these seals do, what these glass to metal seals and ceramic seals do, is they allow us to bring signals in and out of hermetically sealed packages. So just to try and bring that to life for you a little more, I'm trying to look here at some real life examples of where eMech products might be used. So if you look at automotive and transport, then today charging requires very high current switching. It requires temperature sensing, it requires high voltage contactors to handle the DC, and it spans applications that go from cars to charging posts to agricultural vehicles, construction vehicles, and even, as you see there, safety switches on trains. Most of us, I think, will be familiar with that little switch that stops the doors opening while the train's moving. If we look at green technology, then the renewable energy market requires high voltage and current switching. And again, that's to enable the energy developed to be stored for us so that we can make use of it. And of course, that also fits quite neatly with our battery business unit, which is down in Crewkerne. Typical industrial applications for eMech products include heating and ventilating, air conditioning, battery switching solutions, telecommunications. And a typical telecommunications application that you see there would be where a large antenna array needs to be remotely controlled. And we need a means of controlling very high energy systems safely and often in harsh environments. And that's where the DuraCool products come in. In safety and security, applications would typically include the simple level health and safety guards for machinery, or as you're seeing there in the picture, vandal-proof switches, for example, those used in lifts. In fact, almost all of Willow's key market areas are also target areas for the group. Just trying to give you a little more flavour, perhaps a little more detail. What I wanted to do here was just look at one particular example. And this slide that you see in front of you is really a great example of how Willow and AEC products expand the product offering that we have throughout the group for what are high growth structural markets. The new products that are available complement the offering across the entire group of companies without overlap. And it's not just the value-added supplies division. They strengthen the group's position in our chosen strategic markets. This example happens to be a charging post for electric vehicles. The group is already able to offer the wireless connectivity, perhaps cellular or Bluetooth, the processing and computing, the ruggedized and high brightness touchscreen displays, power devices, and design services. But now, added to all that capability, we've got the high value switching and sensing devices from Willow and AEC. And that includes the high current DC contactors, relays, and sockets. And perhaps one of the key points here is that, interestingly, even though these rather dull looking little components, they actually sell for higher values and margins many of the processing and communication chips, despite their relative lack of complexity. We'll take a look at what the group brings to Willow, and then we'll take a look at what Willow brings to the group, just so you can get a feel for why this acquisition was important to us. So what does the group bring to Willow? Well, Willow are benefiting from the large active customer base that the value-added supplies division already has relationships with, whilst at the same time bringing additional products to the existing Willow customer base. The additional resources that the group can bring in marketing, business development, technical support are all allowing us greater market penetration, whilst our ability to invest in growth really does allow us to take the handbrake off for Willow. The senior leadership team at Willow have multiple growth opportunities that being part of the group will allow them to exploit. And with the right investment for the right opportunities at the right time, we expect to be able to significantly grow Willow's business. And if I now flip that around and look at what Willow brings to the group, you can see immediately from the headings that there are some significant advantages to us. So on the other side of the group, and the value-added supplies division in particular, we benefit from the addition of two well-established brands with the opportunity to add complementary products from our optoelectronics division under those brands. The addition of the electromechanical devices takes the value-added supplies division into a new category of products, and importantly, that brings resilience to the business because the various sectors within the electronics industry often behave differently in challenging times. And that's why our industry association measures them differently, categorizes them differently. The group's strategy of expanding our influence geographically is supported by the inclusion of Willow and AEC, with approximately 70% of sales coming from outside the UK, primarily from the USA and Europe. Our strategic goal of expanding our offering or enhancing our offering in strategic growth markets clearly benefits from the addition of Willow, as it takes us into markets such as electric vehicle charging that we showed earlier, where specialist rugged components are needed. And that, of course, is in line with the group's strategy to provide products for demanding applications. Importantly, Willow brings not only the products and markets, but the expertise and experience of a highly respected workforce that helps us to take full advantage of all of these aspects. That experience and the expertise, combined with the product offering, may have some decided benefits for the rest of the group, with devices for switching DC in battery storage applications, supporting our battery or power business, for example, and giving access to markets such as agricultural vehicles, which is in its own right a target market for the battery business. The USA-based AEC operation brings critical mass, and that will be explored so that we can try and take advantage of their sales channels and their channel structure to the benefit of the entire group. So, summary, just very briefly, with Willow and AEC, what we're getting is an unusually good fit in that it hits so many of our strategic goals. An opportunity to truly develop our own brand products, an established operation in the USA and sales across Europe, significant growth opportunities, and the opportunity, of course, to take the brakes off. And all of that really combines to put a step change into the value-added supplies business within Solid State PLC. And over to you, Pete.
Thanks, John. So I've got a couple of slides here to try and highlight some of the key financial points in this deal. And yeah, we'll start here with the revenue here. I think like all business, calendar year 2020 was a pretty tough year. So yeah, Willow's no exception. However, in spite of revenue being down just over 10%, management have taken really sensible, prudent cost management procedures, and as a result, combined with the strong margins John's talked about, they're going to continue to be profitable this year, which is a great testament to the team that we're inheriting. The initial consideration net of the cash was just over 5.5, or just under £5.5 million. And there's an earn-out, in 1 year earn-out for profits in excess of 700,000. The maximum earn-out is capped at 3.5 million. So if the business were to deliver the profits to achieve that, the enterprise value would be about £9 million. So if we took the initial consideration of 5.5 million, with the expected level of profit this year coming up, that would reflect a 9 times earnings multiple. If they achieve their full earn-out, that rate drops to just over 8 times. So either way, we feel that's a pretty fair price for a business like this. And probably one thing to note here is that the gross margins in Willow's businesses are slightly stronger than the existing value-added supplies division, and that reflects the own brand products they've got, the component manufacturing, which attracts a slightly better premium to franchise distribution, where we don't have titles for those brands. So the opportunity, as John said, to grow those and develop those products is really pretty significant. This is a business that hasn't had the benefit of being able to invest in the way we hope to going forward, and we think there's some really fantastic opportunities that I think John's alluded to and talked to earlier in the presentation. The next slide, I've tried to highlight here what the two acquisitions, so this is the benefit of both the Active Silicon and the Willow acquisition on this slide, in terms of what were the consensus expectations from the analysts pre those two deals, and where have those expectations moved for financial year 22 post. So we can see their revenue is up pretty significantly, up just about 20% on where it was without the deals. If we look down the P&L, operating margin up 14%, likewise EPS. So a really positive contribution. No dilution has been incurred in completing these acquisitions. And if we get through here, actually the opportunity to benefit from the operational gearing of both of these businesses, you can see there the gross profit margin is strengthened as a result of Active and Willow joining the group. So as we grow the top line over the coming years, we see a good opportunity to improve our net margins as well. I think it's fair to say the group has a great track record of doing acquisitions, and the strategy with these is to invest in these businesses and grow them and deliver the returns through growth. Here's some pictures of some of the acquisitions we've done previously. So Lempster is our antenna and communication division. We've moved into a new facility and invested pretty significantly there in their capabilities. Pacer, likewise, which is the most recent one we've done on the value-added supply side of it. That's a new facility that they just started to move into, and we expanded the clean room and continued the investment there to give us better capabilities to enable us to drive volume and margin improvement, which will translate hopefully into net margins as well. I'll now hand over to Gary, who will give you a bit of a flavour for some of the history of acquisitions and the strategy going forward.
Thanks, Pete. So for those who are new to Solid State, firstly, I'll touch a little bit on the history. We've been going a long time, so I won't spend too long on it before moving to the acquisition strategy. So the company was founded 50 years ago this year and began life really as a broker distributor of electronic components. From the late 70s, as the component distribution market matured, we signed franchise agreements with component manufacturers, but we were very much focused on semiconductors. We floated on the AIM market in 1996 and were, I believe, company 150 to join AIM. That injected funds into our suppliers business, and the company grew well until the dot-com bubble burst in late 1999-2000. We began to see production moving offshore to Eastern Europe and China. It was then a case of, do we delist or diversify? Thankfully, we chose the latter. And in the 19 years since, we've successfully completed 12 acquisitions to date. Over that period, we've gained a great deal of acquisition, integration, and business development experience. And I will now move on to talk about our acquisition strategy for the business and our plans for the future. So taking value-added supplies first, 2001 and Ginsbury broadened our product offering and customer base, taking the supplies division into what were then new markets in LED lighting, and introduced military and industrial displays to the group. The addition of Pacer brought greater scale to the division, broadening our product range into optoelectronics, taking us into the medical sector and significantly enhancing our value-added capabilities. Willow and our AEC now introduce electromechanical products to our 1,200 existing VAS customers, significantly enhancing our own brand component manufacturing capability. The acquisition of Willow and AEC are very much aligned to the objectives we've discussed in previous IMC presentations. As I said at our RNS announcement, it's rare to find a company that so clearly meets the strategic imperatives that we've set ourselves for the group. Our future acquisition strategy for VAS will develop on those themes, for example, bringing new product areas, as you can see on the left there, like connectors and cable assemblies, while continue our investment program to enhance our facilities, improving productivity and margins, and delivering more integrated solutions to our customers. So moving to our manufacturing division, we acquired Steertight in 2002, and that was really the genesis of the manufacturing division that you see today, introducing computer and battery power to the group. Ever since then, we focused on developing trusted technology for demanding applications. The acquisitions of Wordsworth and Rugged Systems followed in computing, and RZ Pressure in batteries. In 2011, BlazePoint took us into new markets in transportation. We like structural growth markets requiring accreditations, so they give us barriers to entry to would-be competitors. BlazePoint brought us recurring revenues from servicing contracts on 5,500 train ticketing machines we supply to 13 train operating companies across the UK. The acquisition of QPAR took us into microwave antennas and high margin area of electronics and brought us in an international agent network. Creasefield enabled a real step change in production capacity for our power business, introducing new cell chemistries and opening up new markets in battery power. Active Silicon significantly increases the feature set we can now offer to our customers, bringing board level design capability in machine vision, helping us to address rapidly growing demands for AI computing. If you'd like more detail on the Active Silicon acquisition, you can find a recorded presentation on IMC that we gave last week. We will continue to look at both bolt-on acquisitions for each division that address our strategic objectives, but our focus now is twofold on the development of our power business. Firstly, investment again in production. The image on the right shows a robotic welder that can increase production efficiency by up to 90% for certain battery packs. Secondly, acquisitions that further internationalize the group, targeting power businesses with a turnover in excess of £25 million in North America. And beyond that, larger acquisitions that may indeed lead to the introduction of a third leg of the group. So we're now happy to take any questions that you may have.
Great, thank you, Gary, Pete, and John. Would you like to turn your cameras on, maybe, for the Q&A session? That might be nice to be able to see you all. If we could turn to the questions, we've had a number of questions submitted ahead of the presentation. However, if you could please continue to submit your questions using the Q&A tab on the top right-hand corner of your screen. That would be appreciated. I'd also like to remind you that a recording of this presentation, along with a copy of the slides and the published Q&A, can be accessed via your Investor Meet company dashboard after this presentation. Additionally, your feedback is important to the company, so immediately after the presentation has ended, you will be redirected for the opportunity to provide feedback. Looking at some of the early submissions, probably one for you, John, to start with, which is a good one to open up with, because we've talked about structural growth markets quite a lot recently in the last 6 to 9 months. What new structural growth sectors does this acquisition open up?
Yeah, okay. We've spoken about EV charging in the presentation, but I think a more significant one for us is the opportunity to get into green technology and renewables. It's an area of the business we've recognised for some time as strategically important because it's a well-funded, government-funded, in fact, sector. But to this point, we've not had products to play in that arena at all. What we have now is through the Duracool brand, we have the high voltage, high current capability that the group has lacked before. And that in turn brings opportunities for our battery division, for example, where that high current, high voltage switching capability is paramount to us being able to store energy from those renewable energy sources. So an entirely new market sector for us, an application sector, even though it's been a strategic goal for some time.
Okay, thank you, John. Pete, probably one for you, and we get this a bit. How will the acquisition affect margins for the group?
Yeah, so I sort of alluded to it in the slide. Willow's margins are slightly richer than the value-added supplies existing group operations, and that's reflective of the brand ownership and the control of their own destiny with Hermosil and Duracool. So as we grow the business, the opportunity to see those slightly favourable margins drop through to operating margins is very good. And that's a similar theme that we talked to in the presentation for Active Silicon on the manufacturing side as well. That theme is consistent across both of the acquisitions we've done in the last couple of weeks.
Okay, super. And in fact, just while we're looking at the margin question, we've got one here in terms of the product margins. Probably one for you, John. You said the products you sell are higher margin than more technologically advanced products. Why is that?
Yeah, so the differentiator here is that these are not really complex products, but they are right at the edge of what's capable. So if you think about a device that has to operate at 1,000 volts and at the same time carry 1,000 amps, that's a fairly significant device. So the technology that's in there demands higher values and higher prices, which in turn can command higher margins than, for example, a microprocessor or a Bluetooth chip, which in and of themselves may only cost $3 or $4, maybe $10 at the top end, and they're only commanding margins in the 20% range. So despite the fact that they are far more complex devices, they're just not able to command the price and value margin of these much higher current, higher voltage, less complex devices.
Good answer. Thank you, John. Quick one on the US. Can you elaborate on how the US manufacturing facility allows you to increase US sales?
Yeah, I saw that question come up, Gino. Very simply put, the manufacturing operation out in the United States is not just a manufacturing operation. They've got sales in their own right, and they have a very well-established structure of reps and distributors, which we know as channel sales across the whole of the United States. That's a typical way of going to market in the United States. The advantage for us as a group of companies is that is now an established channel that potentially we can make use of throughout the entire group. That's where that comment came from.
Great. Okay. And two questions which we'll just take in succession. They're to do with acquisition hurdles and integration issues. But Gary, maybe one for you. Do you expect efficiency gains on integration?
Obviously, we've got a lot of experience, as I said in the presentation, on acquisition integration. We aren't looking here for efficiency gains. It's very much investing for growth in the areas John has spoken about, in developing that successful platform of own brand products in EMEC that Willow have, and how we develop that. So that's really going to be our focus. Obviously, if there are minor savings we can make there, obviously we'll take them, but it really is investment for growth here.
Super. And Pete, probably one for you, just in terms of acquisitions in general. Do you have any return on capital employed hurdles for acquisitions?
Yeah, we do, and we also look. Yeah, it's a combination of factors, and if we look at these particular ones that we've done recently, there's pretty good returns. So the hurdle rates on the earn-out are geared to ensure that the management team that's still with the business are driving returns post-acquisition, and you can see that in the earnings multiple that falls as they earn their earn-out. So we work through multiple hurdles as a board. Return on capital employed was the one you asked about, and yes, absolutely, that's one factor, but it's also about making sure that we weigh that up with an increasingly competitive market for acquisitions. So we need to pay a fair price to ensure that we secure these strategically important acquisitions.
Okay. Just one question here, actually, which relates to one of the prior acquisitions, which was the acquisition of BlazePoint. Talking about BlazePoint, how has e-ticketing affected the activities of BlazePoint?
The rail network still obliged legally to supply printed tickets. There are about 2,500 stations across the UK that have no barriers. So the revenue recognition people require printed tickets. It obviously will have an impact, but there's an incumbent set of printers there that we need to continue to service and develop. You'll see they've moved from the grey printers. You'll all recall when you could go on a train, moving to the blue and black ones that we now produce and have designed. We will be continuing to supply those for many years to come.
Super. Okay. One here which is a slightly open-ended. I'm not sure whether you might be able to address this, John, or not. But could you elaborate on how you expect the EV market to evolve over the next few years?
Yeah, exponentially. The EV market's a really interesting one in the UK. It's a very disjointed market. So even the EV vehicle market is now disjointed. We've got new players coming in that we've never heard of before. I saw in the news this morning 5 Chinese manufacturers, vehicles names you've never heard of, all with high quality EVs trying to penetrate the UK market over the next 12 months. NIO is probably the one that people will have heard of. So in terms of electronic vehicles, absolutely very, very wide-ranging potential. It's not just the Fords and General Motors that are typically difficult to penetrate, but it's also the agricultural vehicles, the construction vehicles and so on, where ruggedized applications are far more prevalent, and anything that's rugged is a good market for us. In terms of EV charging, again, a very disjointed market. There are about 7 or 8 established manufacturers in the UK. The standards are still being evolved. We talk about V2G now, which is vehicle to grid, which enables your vehicle to supply power back to the grid whilst it's charging overnight. And so it's still very, very much an evolving market. There's still a huge infrastructure required if we're all going to go electric. If you just start to think about every car park in the country, which will have to have charging posts in it, you've still not even scratched the surface of how many charging posts will be required. So we work very, very closely with a lot of the consultants that are driving the designs of these new systems out to manufacturers who are putting their own spin on these charging posts. So I don't have a finite number for you, but it's potentially an explosive market.
Yeah, undoubtedly. Yeah, super great. Okay, well, look, thank you all very much. I must apologise to one investor. I appear to, there was a question that came in, I appear to have lost it. I'm not sure how I've done that, but if your question wasn't answered, I'm afraid that's probably my fault. So thank you, Gary, Pete, John, for your update today. Could I ask investors not to close this session? You'll be automatically redirected for your opportunity to provide feedback. If you access this meeting from the website, the feedback page will appear. If you access from a link sent by email, you'll be asked to log in to submit your feedback. If anyone has further questions or would like additional information on Solid State, please do get in contact via solidstate@walbrookpr.com. Thank you very much for attending. Hope we'll update you again soon. Thank you.
Thank you.
Thank you.